I think at the same time, we're at the very upswing of the institutional cycle because we are now starting to get this cooperation between the crypto ecosystem and the traditional financial ecosystem. Crypto is only still a $3 trillion pool of assets. And now that $3 trillion pool is becoming fully engaged with the $100 trillion pool. That's what's getting institutions so excited, is that they see that this is now foundationally changing the way the markets work.
Very happy to be joined now by Sandy Kaul. She is the head of First Innovation Unit at Franklin Templeton. We'll be talking about regulations, changes in the regulatory landscape for cryptos, as well as innovations happening in the crypto sphere. Franklin Templeton is a leader in innovations. Welcome to the show, Sandy. I'm David Lin.
Bonnie Cheng.
Let's start with regulations first, because not only are you part of Franklin Templeton, you're also on the subcommittee of the CFTC subcommittee on digital assets. So you have a first row seat on what they're actually doing. What are regulators doing right now in the space?
Yeah, it's a very exciting time. So first of all, thank you guys so much for having me on the show. I really appreciate being here. We are really seeing, I think, a unique moment. Our CFTC subcommittee brings together both crypto natives and the traditional participants in the financial ecosystem. And we have been working together as a group to give recommendations to the CFTC chairman and then also to the Trump administration. So the executive order that came out in January basically set a 30-day clock for identifying all of the regulations that needed to change or that had created problems for the adoption of crypto in the US. We have finished that 30-day clock. We've identified for the government a whole series of rules and regulations that they should be looking at amending or removing. We are now in a 60-day window where our recommendations on what those rules should be replaced with are being crafted. And at the end of that 60-day window, we are going to make those recommendations to the administration, and then they are going to use those recommendations to actually craft legislation. And our hopes is by June, July, we should start to have a real sense of what the US regulations are going to look like. And what's the most exciting about that is that it's really being informed at every step by people throughout the entire ecosystem really coming together to give their views.
Yeah.
Bitcoin and crypto, it's one of the rarest retail first asset, and then institutions follow. Now, you've worked with the biggest institutions in the world, but you found Bitcoin early. Tell us the story.
Yeah, so I was working at Citibank, and I was doing thought leadership on how the investment management industry was changing and evolving, and how disruptive technologies were really being brought in to change the way that the markets work. And we were talking a lot in 2012, 2013 about all of the new AI technologies, machine learning, predictive analytics, natural language processing, and big data. And so one of the things that we were talking about is database capacity and how were we going to get enough of the new data sources, the unstructured data sources, into the databases to be able to use to feed this analysis. And someone said, oh, there's this new ledger technology that can hold data called blockchain. So I learned about Bitcoin and I learned about blockchain, and it seemed interesting, but I wasn't quite sure what to think of it in 2012. Wished I'd invested in it in 2012. But in 2015, when Ethereum came along and they started talking about the smart contracts, that was my real aha moment. Because what I realized is that in financial services today, right, there's your traditional assets, even something as simple as a bond, right? And then there's the contracts that govern those assets. And those contracts are in PDF documents at best. Some of them are still literally paper-based documents. And half the jobs in the financial markets today are about reconciling off like paper-based or PDF-based contracts with the assets that they govern. And I thought, oh my God, if I could embed that contract inside the asset as a token, and it could self-execute those terms and clauses on a blockchain, that would completely revolutionize the way that the financial markets work. So that was my real aha moment. And I just began learning everything I could about crypto at that time. By early 2017, I had published a big report that I was taking out to all of the big banks, all of the big asset managers, all of the big wealth managers, talking about how the future was going to be around tokenization. And you can imagine in 2017 that was not a very well received message, but sometimes it's better to be right in the long run. And I think a lot of the firms that were very resistant to that message back then have come around, and we're really seeing great traction now.
Let's talk about tokenization. Do you think a 24/7 stock market is coming? Is it going to be on chain? How do you tokenize, let's say, real estate?
Yeah. So I think there's going to be stages, right? I think that the first stage is going to be taking the potential of smart contracts and using them to make certain processes that today are very highly scalable even more efficient. So I think ETFs are going to be the first area that we see tokenized, and that the entire primary market, the create redeem functions of ETFs, are going to become increasingly moved into smart contracts so that we can increase the speed and the velocity and move to 24/7 pricing for ETFs. So I think ETFs will go first. I think private funds will find some efficiencies from an operational perspective. I don't know if the assets that sit in private funds are really well suited to tokenization, but I think that you will see that start to be the next wave of products that move. And then I think contract-based assets, and that's where I think real estate will be tokenized. That's where I think bonds will increasingly be tokenized, structured products. That will all happen because the contracts can be used and really put into the smart contract templates, and that will automate the capabilities around them and automate the pricing, which will allow us to take them to 24/7. So I think equities will probably actually be among the last, right? I think you're going to see many other products go first.
Is it because of regulation?
No, I think it's going to literally be because people are going to migrate and gravitate towards the areas that they're going to get the most efficiency and save the most cost. And equities trading works pretty well today, and equities settlement. And so that's probably one of the last areas that people are going to look to make changes, because why spend money on fixing something that's already working pretty well today? So I think it's going to be the other areas where there can be cost savings or efficiency gains that go first.
How do you actually, well, back to the tokenizing real estate, you mentioned contract, but how do I actually, how do I prove that this token represents that building or that area? How do I do that?
So this is where you're going to need, I think, regulators to come together with the industry, because what you're going to need to do is you're going to need to move the titles to real estate into a blockchain-based environment. And we're starting to see progress on that in certain countries around the world. So once I register my title on the blockchain, that becomes a transparent record of who owns that property. Now, it will be, your personal information will be hidden because it will be just a public key address, but it's clear there's only one version of that title, and that one version is trackable. And then once those titles are on chain, then you're going to work with the Oracle networks to begin delivering in key information, residency rates, valuations around the property itself, expected completion dates, etc. So that data will get fed into the smart contracts embedded in that tokenized piece of real estate. And then once you start to sell the tokens, the payments associated, the payment schedules associated with that real estate will be embedded into the smart contract, and all of the destination wallets that will receive payments will be set up within the smart contract so that that all becomes part of an ongoing process. So I think we're at the beginnings of being ready for that by seeing some of the governments beginning to move their titles onto a blockchain-based system, but we still got a little bit more work to go.
Do you think it's going to be on Ethereum?
I think Ethereum will always be one of the main chains, right? There's a huge first mover advantage in any network-based ecosystem. Ethereum has established many of the smart contract templates that are used by many people around the world. I don't think Ethereum will be the only blockchain. We at Franklin Templeton we've deployed our infrastructure across 8 different public blockchains already, and we will continue to expand that. And we're running our own node operations on 12 different public blockchains. So I think there will be multiple chains, but I think Ethereum will always be one.
Before we continue with the video, let me tell you about today's sponsor, Delete Me. Your personal information is probably online right now. Your full name, home address, phone number, sitting on data broker websites that anybody can access or buy. It's unsettling, but that's exactly why I use Delete Me. Delete Me helps remove your private information from hundreds of data broker websites. I've been using it for months, and every time I check my privacy report, I'm shocked by how many places had my data and relieved that it's gone now. Getting started is simple. Submit your info, and in about a week or so, you'll get a personal report showing where your data was found and what was removed. And it's not just one and done. Delete Me keeps scanning and removing your data throughout the year. Go to joindeleteme.com/DavidLin and use promo code DavidLin at checkout. Link down below, or scan the QR code here on screen and get 20% off of all US plans today. Take your privacy back seriously before somebody else does. We're at the DAS, the Digital Assets Summit. Earlier, President Donald Trump made a pre-recorded speech at the conference, the first of any sitting president to address a crypto conference, and he said that he wants to make America the undisputed Bitcoin and crypto superpower and capital of the world. How is he going to do that?
I love lofty aspirations. What can I say? I think that the first key to that is, as we discussed, David, the idea that you need a regulatory framework that people can rely upon, that has common sense regulation, that avoids maybe some of the pitfalls of the existing U.S. system. I mean, don't forget, most assets in the U.S. are governed either under acts which were written in 1933 or in 1940. That's getting pretty dated at this point. So sometimes we have to take that step back and reimagine how processes need to work. So I think there is a very open attitude right now in the US, and if the Trump administration can follow through and keep that open attitude and be willing to revisit some of the way that the system has operated for the past 80 years, then I think we have a really good chance of potentially rewriting the system to fit the technologies that are available today and to really create a 21st century system. I don't know how the US becomes undisputed champion in that. I think that whatever the US adopts will become a template that will be harmonized elsewhere in the world. And when you think about where capital flows are coming, the US is a large part of the capital markets, but China, Asia, the Middle East, Brazil, Europe, there's many regions that have assets to bring into the system, and I do think one of the beauties of crypto is that it is a global system. So I don't think you're going to have any one country be the undisputed leader in the world.
Do you think we are still super early? We're at the institution kind of event and everyone's super excited, but when you go back to the retail conferences or the retail group chats, everyone's super bearish. Well, why do you think that is? Is it because we speak different language, or are just the retails just don't know what's going on?
Or maybe different points of the cycle.
Yeah, I think it's a little bit of both, right? I think you guys have hit on something really important. I think for retail, crypto was very exciting during the COVID era because people had a lot of time on their hands. They were getting payments from the government, and it became a real source of both entertainment but also profitability. Like, people were able to capture some of those bull markets that we had in that period and make a lot of personal money. Since then, people have gone back to work. People have had maybe tougher market conditions to catch. We went through the crypto bear market. And so I think it's harder to get retail as excited today, just because of where retail is in their cycle in terms of them needing to maybe, think a little bit more carefully about how they diversify their portfolios. They might not have quite as much disposable cash after the recent period of inflation. But I think at the same time, we're at the very upswing of the institutional cycle because we are now starting to get this cooperation between the crypto ecosystem and the traditional financial ecosystem. And people forget, in the excitement of how well crypto has done, crypto is only still a $3 trillion pool of assets. And now that $3 trillion pool is becoming fully engaged with the $100 trillion pool. And that opportunity to use the technologies that were developed for the $3 trillion pool and begin to pull in the $100 trillion pool and then pull the $3 trillion into the portfolios that the traditional firms offered. I think that's what's getting institutions so excited, is that they see that this is now foundationally changing the way the markets work. For retail, it was catching a bull market, which was great and fun. But now we're at the point where we're actually changing the way that the global financial system operates. And that's why I think why the institutions are so excited.
Well, I believe we're still trying to chase the bull market because most retailers believe in the 4-year cycle where Bitcoin rallies first, big cap, small cap. Is it happening now, or is it because the environment is so different? Maybe it's going to change.
I do think that retail will become increasingly excited over the next few months. I think that high inflation really hurt retail interest all over the world. And I think that when you have only a limited amount of money and you've got to decide if you're buying eggs or you're investing in Bitcoin, it was tough. Now I think you're seeing some stabilization, and I think that you will see the money start to come back in from retail. But what's been so interesting is that as more institutional money has come in, we've also seen volatility go down a lot, right? And we're not getting quite as dramatic swings as we used to see either. And I think that too is going to make retail increasingly excited about the markets, right? Because they don't want to risk quite as much, but I think that they will be very excited about seeing that now it's taking on a more traditional market structure in terms of how the bull market is unfolding.
Franklin Templeton has a Bitcoin ETF. It's EZBC. Before we move on to future potential launches, who's been buying this?
So we actually have had great uptake from our EZBC product, from a lot of the wealth networks, right? So Franklin Templeton, particularly here in the US, is very entrenched with a lot of the wirehouse networks and the RIA networks, which are wealth advisors. We actually have several products now. The EZBC, our EZ-ETH, EZ-ET, and we launched last month what we call EZ-PZ, which is both a Bitcoin and Ethereum blended ETF,
okay.
Right? But the reason
Marketing
EZ-PZ,
department needs a raise.
I know. The reason that EZ-PZ, which makes crypto investing easy, is so important is because, it's very dangerous to invest in a single asset in a portfolio.
Sure.
And so having a multi-coin ETF has now allowed us to integrate Bitcoin and Ethereum as a blended ETF into our model portfolios with equities and bonds. And that is how retail advisors sell in the US. They like to sell a model portfolio that has a diversified set of assets in it. So we have now reached the point where we can give them a diversified crypto product in a model portfolio. And I think that's going to really be what ignites the big flows into these products over the next 2 years. And what's unusual about our EZ-PZ project is that every time we add a new ETF offering, and we've already had 2 additional filings, we are able to add those additional ETFs into EZ-PZ. So eventually we'll have 6 or 8 different ETFs in it that give you 6 or 8 different cryptos in it that give you a diversified exposure.
Can you comment on these 2 additional filings?
I'm not sure, so I'm not going to.
Okay, fine.
I never like to get in trouble with my
Fair enough.
with my regulatory.
Just doing my job, Sandy.
Just doing mine too, David.
I understand that there is a demand for Bitcoin, Ethereum, Solana, but when you talk about all the rest of the altcoins, do they all deserve an ETF?
Well, so I think do they deserve an ETF is maybe a secondary question, right? I think the first question is we look at the entire altcoin space and say, what are the coins that actually deliver the underlying value of the network? Like, how is the coin structured? How do they plan to do the tokenomics of the supply and the demand? Who have they included in their pool of tokenomic owners, right? And so what we have is we have a research division at Franklin Templeton who does research. We do research into about 35 different coins right now. And what we do is we put together price targets on every one of those coins, and we do a full analysis, just like we would for an Apple stock or a municipal bond. We do a full piece of analysis, but the difference is that we also do our whole set of tokenomic analysis on top of it. So one of the fun things that I've been getting to do is teach institutional investors what are tokenomics and why are they important. Because the structuring of the token pool is actually a huge indicator of what kind of value the token is going to deliver. So we think that there are at least 30 to 35 tokens that are delivering actual value of the underlying networks, and we believe that many of those tokens will be suitable for ETFs, but we like to see the network volumes grow to a certain size to get comfortable that they're ready for the ETF structure, because the flows in ETFs can get so big that you need to know that there's going to be a ready supply that can be accessed without disruptive pricing. And that's why you wait, and that's why you're seeing just the bigger coins being considered right now.
You mentioned forecast. We are dying to hear your forecast for Bitcoin 2025, 2026.
I can't make those forecasts, unfortunately, because I'm not part of our investment team, but I promise I'll get you guys a follow-up. How's that?
Okay.
Sorry.
Well, not forecast, but maybe demand and supply drivers, just macro forces that could move.
Yes, we are very bullish on Bitcoin, and we are very bullish on many of the cryptos right now. We believe that we are still in the early stages of the bull market. We believe that 2025 is going to be a very profitable year in terms of potential upside price moves, and we believe that we're going to see this inclusion of crypto as an asset class in diversified model portfolios become a standard and a norm. So that will continue to bring in flows, we think, even beyond the traditional 4-year cycles that we typically look at in crypto. So the drivers that we see and the fundamentals we think are very positive. Things like crypto reserves that people are talking about now, that could start to play into the geopolitical importance of holding crypto, which we think could even be an additional boon. So I think that the fundamental factors are super important and very positive.
Excellent. Well, that wraps it up for me. Bonnie, anything else?
Well, last question, because our audience is always very curious. They want to know, how do they become wealthy, right? So if you had, let's say, 100K sitting on the sideline, how would you advise people to invest?
So I always say to people, and I take this to my own portfolio as well, is you should always think at least 10 to 20% of the money you have should be in risk assets. I think that, to me, I don't think there's a better risk set of assets out there than crypto. And so, I think it's important for every person to have exposure. I mean, this is really, historically, people will look back at this period as being like getting into the internet stocks in the mid-1990s. So I think that we're at such an important part in the cycle. I think that every person should think from a personal perspective, how much of their investment capital can they afford to be in a riskier asset? And I would absolutely be allocated.
What about the other 85%?
Oh, I'm still, I'm still a little old school, and I think you need to be diversified. So
maybe real estate and
real estate, I think, is great investment. Private funds, if you are a qualified investor, or take some of these new structures that people are coming out with to democratize access to privates. And I think in many areas of the world, equities and bonds are still excellent investments. Maybe not in all areas of the world anymore, where I think that they've become very commoditized, but I think certainly Asia, emerging markets, parts of Europe, even small caps and mid caps in the US, I think that there's a lot of opportunity out there.
That was great. Thank you so much.
I think we're all good at our jobs.
Great.
Thanks very much.
Thank you so much, you guys.
Thank you.
Pleasure being on. Thank you.